All right, welcome back to Talk Tickers, the show where we take these earnings calls, and we really try to break them down.
Yeah, getting into the nitty-gritty.
Exactly. In today's deep dive, we're looking at Nano-X Imaging, ticker NNO.
And this is their Q4 2024 call.
Q4, yep. And the market, well, it didn't exactly love what it heard.
A little bit of a dip, yeah.
A dip, yeah, 4.59% down on the day. So we got to figure out what's going on. Right. What did they say? What's the real story here?
Absolutely. Beyond just the top line numbers, what's their strategy?
Exactly. So for anyone just tuning in for the first time, we take these calls, we listen closely, and then we try to give you, the listener, like the key takeaways.
The insights that you might miss if you just skim the headlines.
Totally. So Nano-X, first off, they reported a bigger net loss this time around, $14.1 million compared to, $10.2 million, same time last year.
That wider loss.
Wider, yeah. And they pointed to a couple things, a bigger gross loss, some higher operating expenses.
And they had that one-time income last year that didn't happen again.
Right, which makes sense.
Got to factor that in.
Totally. But on a more positive note, their revenue, it did go up, so that's good.
Up to $3 million?
Yep, from $2.4 million, so, moving in the right direction there.
But their GAAP gross loss, that also went up.
Yeah, it did, up to $2.9 million from 1.7, so something to keep an eye on.
And it's worth looking at the non-GAAP numbers, too. Sometimes it gives you a clearer picture of the core business.
Oh, right, a different lens.
Exactly, and on that non-GAAP basis, they actually had a gross loss of $0.3 million.
Oh, interesting.
Compared to a profit of $0.9 million in the same quarter last year.
So a swing in the wrong direction, kinda.
Yeah, bit of a swing. Definitely something we'll dig into deeper.
All right, well, let's break down where that revenue is coming from, because that's always interesting, right?
For sure.
So their tele-radiology services, that seems to be a bright spot, $2.8 million in revenue.
And a GAAP gross profit of $6.6 million.
Yep, and that's up from, $2.3 million in revenue and only $0.3 million in profit the year before.
So healthy growth there.
Healthy is a good word for it.
Their non-GAAP gross profit for that segment was also up.
Oh, even better.
Hit $1.1 million compared to $0.9 million the previous year.
Okay, so what's driving that? They say customer retention's good, they adjusted some prices, and weekday volume's up.
Makes sense. All positive indicators.
Yeah, and, it seems like this teleradiology, it's kind of a solid base for them, right?
Definitely a consistent revenue stream while they build out the rest of their tech.
Right, and the fact that gross profit's improving there, it suggests they're getting more efficient.
Potentially leveraging what they've already built effectively.
Yeah, smart.
Now let's get to the heart of it, the imaging systems.
That's what we're all here for,
Right. How are those sales and deployments going?
Well, revenue came in at $136,000.
With a GAAP gross loss of $1.5 million.
And a non-GAAP loss of $1.4 million.
Okay, so still in the red there.
Yeah, but it's a huge jump from the $17,000 they brought in the same quarter last year.
So small numbers, but big percentage growth.
Exactly, and that $17,000 came with a $44,000 loss. So it's definitely heading in a better direction.
So what's behind this increase?
Seems like it's mostly from their 2D system sales.
And they mentioned an OEM project in the U.S.
Right. That's key.
Yeah, I mean, this segment is clearly in its early days, right? Big losses are expected.
Yeah, it takes time to ramp up production, get everything set up.
But that year-over-year growth, even from a small base, it shows there is some early market validation happening.
For sure. People are buying, at least in small numbers.
Now, what about their AI solutions? How did those perform?
Well, revenue there was $83,000.
With a GAAP gross loss of $2 million?
Pretty much the same as last year, right? $84,000 revenue, $2 million loss back then.
So not much change on the surface.
But their non-GAAP gross profit for AI actually went down.
Down to $6,000 from $21,000.
Yeah, so it seems like they're still investing heavily in development and getting those customers.
Makes sense. AI is a long game.
Right, and it's worth noting that this AI stuff, it could be a big differentiator for them down the road.
Yeah, it adds value to their imaging systems, makes them more attractive.
Okay, so that's the high-level financial picture, but now let's get into some of the more, the exciting stuff, the operational highlights.
The meat and potatoes.
Meat and potatoes, yeah. And first up, regulatory wins. Big news here.
Huge news, yeah.
FDA gave them general use clearance for their Nanox.Arc system in December.
That's massive.
Huge. Covers all sorts of uses now, musculoskeletal, pulmonary, you name it.
All alongside conventional radiography.
Right, as an adjunct.
But then, in February 2025, they got the CE mark for Nanox.Arc too.
And that opens up Europe, right?
Big time. And here's the key. It's approved as a standalone imaging modality.
Ah, that's different.
That's a big deal, yeah.
So what does all this mean? Well, it means they're good to go in the US and Europe.
It de-risks their whole commercialization strategy.
Exactly. No more waiting on those approvals.
And that CE mark, especially as a standalone device, that's really interesting.
Yeah, in some European countries, the way they do things, they might adopt this even faster than in the US.
Where it's more of an add-on.
Right, so that's something to watch closely.
Speaking of watching closely, what's happening in the US market specifically?
Well, they say the early feedback on Nanox.Arc has been positive.
That's a good sign.
Yeah, and they're building out their networks, signing up new partners.
They mentioned Advanced Southern Imaging in Georgia.
Right, and they're talking to others too, trying to get that reach.
So how many systems are actually out there?
They say dozens are in various stages of shipment and deployment.
Across multiple states.
Multiple states, including Tennessee. They just added that one.
And are people using them?
Well, they highlighted this one multi-specialty clinic.
Doing about 10 scans a day.
Yeah, 20% of those being chest scans.
Okay, so real-world usage. That's what we want to see.
Right, and their pipeline, it's targeting a few hundred clients right now.
Who are these early adopters?
Seems like it's mostly smaller imaging centers, orthopedic clinics, chiropractors.
The early majority.
But they are seeing more interest from bigger medical centers and chains.
Makes sense. Got to start somewhere, prove the concept.
Right. Smaller players are usually quicker to adopt new tech.
Then the big guys follow suit once it's proven.
Exactly. So now let's hop across the pond to Europe.
That CE mark unlocks a huge market.
Huge, yeah. But their strategy there is a bit different.
How so?
Well, in Europe, they're going with distributors.
To reach more customers.
Right, makes sense. They already have agreements in Romania and Greece.
And more in the works.
More coming, yeah. But here's the interesting part.
What's that?
They think most of their initial European sales will be through, what's it called, CapEx?
Capital expenditure, meaning customers buy the system outright.
Right, rather than the subscription model they're pushing in the US.
So why the difference?
It's got to be the different healthcare landscape, right?
Probably, yeah. In some European countries, outright purchases might be more common.
Well, maybe it's just to get revenue flowing faster in a new market.
While they build out their service and cloud infrastructure there.
Yeah, makes sense. It'll be interesting to see how that plays out.
So let's move on to their AI side of things, Nano-X AI.
Lots going on there.
They snagged 2 new U.S. customers.
Including a big outpatient imaging provider using their Health OST platform.
Through the Blackfoot Platform Marketplace.
Yep, and they also partnered with Ezra.
Integrating Nanox.AI's population health solution into 28 imaging centers.
Wow, that's a lot.
Using MRI and CT scans for early detection.
Smart move. And overall, their total AI customer and pilot projects are up 25%.
Solid growth.
Yeah, they're also working on a new pulmonary AI solution.
Specifically for Nanox.Arc.
Yep, aimed at the growing demand for lung cancer screening in Europe.
Leveraging their tomosynthesis AI capabilities.
It's all connected.
It is. They're building a whole ecosystem here.
Makes those systems even more attractive.
Definitely. A strong value proposition.
Now let's talk about those OEM partnerships. Those are key.
Absolutely. Crucial for scaling up.
So their technology development center, they're making progress on multi-source applications.
Which could lead to faster imaging, smaller systems, more flexibility.
Not just for medical use either.
Right. They're looking at security and industrial applications too.
Thinking outside the box.
And those prototype tubes with their CS chips, those are on track for sub-production quality this quarter.
Varex is also moving forward with production of Nanox.Arc tubes.
And they're developing multi-source modules.
Oh, and a big one, a major medical diagnostics company. They've assembled their first prototype tubes using the Nano-X emitter.
That's a big vote of confidence.
Huge. And on the security front, their U.S. government project has finished component build and testing.
They're finalizing 2 unique tube designs.
Lots of irons in the fire.
They are. And these OEM partnerships, they're not just about making more tubes, right?
Right. It's about diversification, tapping into new markets.
Accessing expertise they might not have in-house.
Totally. Smart move.
Now, on the clinical side, how's that going?
Well, they got some good news from radiologists on their independent review committee.
What do they say?
Basically, they confirmed that Nanox.Arc's digital tomosynthesis, it provides more detail, more clinical value compared to regular X-rays.
That's what they've been saying all along.
Right, but now it's backed up by these independent experts.
And they looked at image quality, lesion detection, learning curve, the whole 9 yards.
Over 80 DTS studies reviewed.
That's a decent sample size.
Yeah, and their multi-site trial in Israel, that's moving along nicely.
You're even talking about adding some big European sites.
It's expanding the reach.
And so far, they've enrolled over 100 patients across all their trials.
That's good progress.
It is. Clinical validation is key.
So before we get to our fun segment, let's just quickly circle back to those financials.
Provide a bit more context.
All right, so that bigger net loss, it was mostly because of the higher gross loss.
And that one-time insurance payout they had last year.
Right, that's gone now.
The revenue growth was mainly driven by tele-radiology.
And those early system sales?
Yeah, the non-JAP loss on the system side, that's expected early on.
As they scale up.
Now, their R&D expenses, those actually went down.
Interesting.
So while G&A went up, mostly because of legal costs.
Compared to last year when they had that insurance recovery.
Right, makes sense.
Their cash position, though, still looks pretty good. $83.5 million at the end of the quarter.
Enough to fund their plans.
Yep. And they did that equity offering, brought in another $38.8 million.
Which gives them more flexibility, but does dilute existing shareholders.
True, but I guess that's the trade-off.
So what's the takeaway for investors?
Well, the FDA clearance and the CE mark, those are the big wins, no doubt.
Opens up massive markets.
And they're really pushing for U.S. market penetration, building their team, signing those partnerships.
That European strategy, though, with the CapEx model, that's something to watch.
It is, different approach.
Their Nanox.AI business is also growing. Those new customers are key.
And that new pulmonary solution, that's smart.
Tailored to the European market.
Aligning with the demand.
And those OEM partnerships, those are crucial.
For scaling production, getting into new markets.
That positive clinical data, that's also important.
Builds confidence among doctors.
Investors will have to keep an eye on those extra shares from the offering, though.
Dilution, yeah.
But overall, the company's saying 2025 is going to be big.
EU launch, expanded U.S. applications, maybe even clearance for Nanox.Arc.
A lot to look forward to.
It's all about execution now.
Turning those approvals and partnerships into revenue growth, showing a path to profit.
That's what investors will be watching.
Absolutely. Those are the key metrics.
Okay, so now for the fun part, our This Is Not Financial Advice segment.
Where we get a little speculative.
A little wild, but still plausible, right?
Within the realm of possibility.
So here's an idea, and this is just for fun, folks.
Not recommending anything.
What if you went long on Nano-X?
Okay, long Nano-X.
But then at the same time, you shorted a big established medical imaging company.
One of the old guard.
The one still focused on, old school X-ray tech.
Analog instead of digital.
Right. The bet here is that Nano-X, with their fancy digital tomosynthesis, their smaller systems, all those new approvals, they disrupt the market.
And the old guys get left behind.
Exactly. Especially if Nano-X really takes off in those smaller, more niche markets.
Where they can get a foothold.
This is high risk, high reward, of course.
Depends entirely on Nano-X executing perfectly.
But hey, it's a fun thought experiment.
And what if, instead of shorting the old guard, you went long on another company alongside Nano-X?
Oh, like a double down on the future of imaging.
Something like that. What about a company specializing in tele-radiology services?
The ones that do remote image reading.
But specifically the ones focused on AI-assisted analysis.
Ah, I see where you're going with this.
The idea is, if Nano-X's systems make imaging cheaper and more accessible.
More scans overall.
Exactly. Then the demand for teleradiology, especially the AI-powered kind, explodes.
But you need someone to read all those extra scans.
And AI can help handle that workload.
So it's a bet on this synergy between more accessible imaging and the companies that analyze those images.
A bet on the whole ecosystem growing together.
Again, super speculative.
But fun to think about.
All right, well, that wraps up our deep dive into Nano-X Imaging's Q4 2024 earnings call.
We covered a lot of ground.
We did. The financials, the regulatory wins, their U.S. and European strategies.
The AI progress, the OEM partnerships.
It's clear they're ambitious, they're pushing hard.
And the next few quarters will be telling.
Will they turn all this potential into real revenue growth?
That's the million-dollar question.
And of course, gotta say it, this is not financial advice, folks.
Do your own research, talk to your advisor.
We're just here to give you the information, the insights.
And help you make informed decisions.
No, we want to hear from you. What do you think about Nano-X's European strategy?
That CapEx model, is that going to work?
And how big of a deal is that FDA general use clearance for their U.S. prospects?
Let us know your thoughts. Join the conversation.
And be sure to tune in next time for another exciting deep dive here on Talk Tickers.
We'll be breaking down another earnings call, uncovering the hidden gems.
Until then, happy investing, everyone.